We've been hearing about cautious growth, I guess, since the start of this conference earlier. And what's that going to mean for property strategies? Well, it's clear from the research that there's three key areas. Some companies are still in consolidation mode. Some are looking for efficiencies through how they use their workspace. And then some are actually looking about expansion. Now, whether that expansion is headcount or whether it's revenue and whether that means property is the question that we need to look at. But three distinct areas. And in order to achieve that, I think there's some interesting things beginning to come out of the findings, which are worth talking about over and above the cost reduction that we've all been living with for the last 2 years. So these are ranked below cost as an important factor. And actually, I think it's a little surprising that if you think about increased importance of working practices, this is still only ranked in high importance, which I'm taking 7 out of 10 at 47% of the people that we talk to. So it's relatively low, but getting more important. You think about wireless technology and everything to do with technology and the effect that's having on the workplace. Again, we got 41% ranked that as 7 out of 10. We think these are both trends that are coming through, and they're going to come through in what is now in the industry, in many areas, being called activity-based working. So how do you use the space most efficiently? And again, we'll come on to some of the later research, but I think that's something we need to think about in terms of its activity and locational-based working is a better way of thinking about it, because it's the location you do it in as well as what you're doing that's really going to drive the change in our industry and what we do with property over the next 5 to 10 years. So we need to be thinking about what our businesses are doing. We need to think about where they're doing them, and we need to think how best it can be done. And I think if we kind of try and wrap all that lot up in just this end of this section, we're beginning to see the economy getting better, and we hope that that's going to continue over the next 2 to 3 years. But clearly there's a lot to happen over the next 12 months with all the government cuts to see what actually happens. We're seeing different rates of growth from Asia still to Europe, and we're going to talk about a bit about the difference between Western Europe and Eastern Europe later on. But clearly there's a geographical spread to where that growth is coming. We know that technology is going to drive us having less space, and that inevitably will drive down cost. So there's a big connection between the use of technology and driving out cost, which is what we need to do. The use of technology also allows us to locate in different places, which again changes the cost structure. So again, there's that connection between technology and how it's being used and the cost in terms of delivering for the business what it is that we need. And I think if you wrap that around with this activity and locational-based working, you start to see that higher productivity for businesses and the drive of revenue that they're all looking for, and also the brand that we were talking about earlier. The brand with corporates is becoming more and more important, and that's a trend that we see as something that will increase or trend upwards over the next few years. A lot of our clients are now talking to us about staff retention and attraction and brand in the workplace. So how do they keep the workforce they've got? How do they make them more productive? How do they attract new staff? And again, we need to think about the different generations in the workforce, which I'll touch on later. And the key to all of that seems to be how we use the space and where we have it. So it's less about the bricks and mortar, more about the design, the branding, and that's why this whole concept of activity and locational-based working we think is what is going to drive what we should all be doing over the next few years. We are now in a position where we have 4 generations in the workplace, which is something none of us have really experienced before. We've got the traditionalists, which is where I firmly sit, baby boomers, the X and the Y generation. We have to accommodate the space that we're giving people for those 4, if you like, segments of the workforce. And they all want 4 very different things, and so that's a big challenge for us. We believe that there is going to be growth, but it's going to be coming in new and different markets, not just in the established emerged markets of China, India, Southeast Asia, but also some very unestablished markets, which may include some countries in Africa, which many of us probably don't want to go to, haven't been to, or would find very difficult to do business in. And we think that's going to pose a huge challenge, but it's one that we have to be ready for if we're going to help our companies grow. And lastly, we think technology and the way in which we work is going to be absolutely fundamental to getting this right. Smart companies will use technology to their advantage, and they will get a competitive advantage by doing so. And the space in which we work, this whole idea of activity and locational-based working, is what is going to dominate the workplace and is going to help us work with our HR teams and our business units to deliver productivity gains through the workforce. And it's up to us to help them understand how real estate and the space we operate and how we operate in it will do that for them. And again, I think if we can't get our heads around that and do it better than we're doing at the moment, we're going to miss a trick. And I think all of that is wrapped up in this whole issue of sustainability, corporate social responsibility, or whatever you want to call it. But that is going to get driven by governments, and it's going to get driven by the people we employ. And at the end of the day, the brand of all of our companies is wrapped up in all of that and is absolutely critical.